Hello friends, this is Cryptonian taking a look at Bitcoin. Why? Well, because Bitcoin, old man Bitcoin fell down the stairs again, fell out of bed, and now the market is uh, feeling some pain. The market's feeling some pain. There are a couple of outliers here um, that you see. API 3, DYDX, they're both pumping today. And so there are places in the market. Now is the time to be watching your favorite altcoin. You could see a significant pump from your favorite altcoin, your favorite project. Now, a lot of people I see are bearish. They're calling for, a new bear trend, etc., etc. And it feels pretty bearish at this point. I will not disagree with that. However, I think it's important at this time that we do take a look at uh, the big picture, take a look at some data on the daily chart. Um, on the daily chart, I mean, we are clearly at a higher low. Okay, we're still having a large macro structure that is bullish, and so we're still seeing a higher low. That's very important to know. Everyone was saying that this point here, this price point support had to hold and was critical. It was important, yes, but I do believe that what's critical is what this area here of the 37.3 that we're just above now. That's critical. If we break that, then the next low is next price support is down in the Wyckoff zone, and that's anywhere from that 37.3 down to 29, and that's could be very, very painful. Do I think that we're going to get there? I don't think so. I think that here on the daily, we are oversold on the daily. And usually when we're oversold on the daily, we see a rally to the upside, right? Hold on. Sorry about this, guys. Sometimes my marker doesn't want to delete like it should. So, yeah, there we go. So the RSI is oversold. The last time that we saw the RSI being oversold was back in last year in the summer when we had the big selling climax. It was 22, 21 in this area. Okay, and then from there, excuse me, we went sideways and then we went up from there. So I do see a bounce taking place here. Whether it's short term or long term, I do see some upside from here. The RSI is currently 26, something like that on the daily. So we're not far from that same level that we were here on the selling climax, 21, 22, actually 22, and now we're 27. So pretty close to that point. So I do expect some type of a move to the upside. The question is how far? Well, we do have resistance at 42. That is the upper boundary, upper resistance line of this channel. Now, what's important also to note is that this channel here is a descending channel. Descending channels, believe it or not, are bullish, and we've been in this descending channel for a long time, ever since the all-time high at 69 right here. So uh, descending channels and ascending channels are meant to be broken. They do not carry on forever. And so when we know that, and when the RSI is down here, oversold, I do expect some kind of a bounce. Now, when will that bounce be? Not really sure. Should be soon. Today's Friday. Fridays are usually flat, bearish. The weekend, the market is shocked right now, so the weekend may see a rally, may not see a rally. Not really sure. I'm not really concerned with the short time frame right now. I'm more looking towards next week or the following week. We could see some type of a rally. I do expect to rally something next week. Excuse me. If we do break the 27.3 area, then that's going to be bad news, and that could change the bullish macro structure, and we could see as low as 29. I don't think we're going to get there though. I just don't believe that. It may take some time for that to happen. I think that a rejection from this 42, 41 area. If we rally, would be, we could see that at that time, could see a lower low at that time. That would reset the RSI. But right now, and just from what I've seen in the past and what I know about charts and the data shows that we should see some type of a push to the upside. Some type of push to the upside. The accumulation distribution line on the daily is it's stone cold. It's strong. We're not seeing any major sell-offs on the daily now. We do see some sell-offs on the lower time frames. And look, as far as this, and I've said this before, as far as the volume, we have declining volume. We're getting pretty low on our daily volumes, and so that also tells me that there's less and less interest in selling here, and because there's less and less interest in selling and less volume in selling, that increases the likelihood of a reversal at this point and a push to the upside. Now, taking a look at the previous downtrend, we did see that we sold down about 53%. That's right here, 53, 54%. And measuring from our high to where we are now, we're at about 42, 44%. Okay. So, although this feels bad and it feels severe, it is. I mean, if especially if you purchased at higher levels, you're feeling pain. I totally agree with you. I totally understand. Excuse me. That's totally understandable. If you're a newcomer and you purchased somewhere up here and you're still holding, you're feeling pain right now. But just know that currently right now what we've seen is less drop, less of a correction percentage-wise than what we've seen in the past. Probably about 11 or 12% less than what we saw in this area here on this huge drop. So that being said, I think the critical area here is 37.3, which is this price support here. If we break that, we could risk the entire bull market, and the structure could turn bearish, and the macro bull trend could change and turn bearish, and we could see 29. Again, I'm not saying we're going there. I think that it's a little bit early to tell. I think that we're going higher from here because of the volume and the RSI. I do believe that we're going higher. Now, one other thing real quick before I wrap it up is on the accumulation zone this last summer in 2021, we saw the selling climax. We went into a high within the zone. We saw a high and a rejection, and then we had two lows here and here, and then we went up from there. And we went up from there very hard, very fast, decapitating all the bears. Now, what does that mean? Well, if we're going to repeat the same type of scenario, this is our selling climax where we were rejected at the zone high, and then we came down, had one low, and now we had a second low, right? If history repeats, we should be going up from here, okay? Now, one thing to bear in mind is that this structure, this Wyckoff zone, was horizontal for the most part. This Wyckoff zone, the reason why it feels so bad and feels so different is because it's not horizontal. It has an angle slanted towards the downside. So here in the Wyckoff zone, previous and last summer, this was the fatal stab test. We went up into a low vol. We had a small rally, went into a low volatility, price compressed, low price range trend down here just for a short period of time. When we went to the lower support area, we shot up hard, 10, 12K in about 1 to 2 weeks. So if this is to repeat, if this was the fatal stab test, What we just saw could have been that um, very weak upside push and then into this last leg, and then we could see a what's called the spring, a very hard, very fast reaction to the upside. Now there's no guarantee. There's no guarantee. So that's if we repeat what we've seen in the past. Now this could be the fatal stab test here that we just received. If that's the case, we would see a push to the upside and then a very low volatility, just a very tight price range, drift down to the low side until we hit about 39, and then have a high push to the upside, right? Hopefully making a new high. Now, if we go up from here, we need to break resistance at about 42, 43. We need to push higher, and we need to make a higher high. We really do. We need to break out above and beyond the 70K area to continue the trend, to continue the bull trend. The other option is that we hit 70K again, and then we come right back down again to the 41 or maybe slightly higher, maybe 45 area, and essentially creating just a large, huge consolidation area right here. Okay, and then eventually breaking out to the upside, something like this, breaking out to the upside after that. We could be in like this huge ascending wedge, right? That essentially would look something like this. Okay. Again, let me draw that a little bit better on the chart for you. Let me remove this real quick here. Hold on. Where are we? There we go. Well, no. Let me remove this for you. It's not working. There we go. Let me take that out. All right. So what the wedge would look like is, let me compress this a bit so we can see where we're going here. The wedge would look something like this. I'll draw it out. All right, so what we could see is going up from here, if we didn't make a new high, we would come down and make a slightly higher low, probably around 44, 45, and then go up again, still not making a new high, and then maybe a slightly higher low, and you can see that this would turn into some very huge monolithic accumulation zone, right? Or actually you could call it an ascending wedge, because this would be your area where you have it's a flat top, and then you would have an ascending bottom, which would basically be an ascending wedge, a huge macro ascending wedge. We could see something like that, although it might not take as long to resolve as I show here. It could be something a little bit more like just a couple impulses. Next impulse, we do not make a higher high. We come back down, make a higher low, and then we break out to the upside. We could see something like that. So anyway, there you go, friends. I don't want to make the video too long. I do believe that on the macro, we are still in a bull trend, and although it doesn't feel like it, but if this macro analysis, if we're going to repeat what we've seen in the past in this area here, and if this is the Wyckoff accumulation zone that I've been saying and identified, then from here we're going to be going up. Okay, that's my story. I'm sticking to it. I'm going to be looking for some positions down here once everything resolves, possibly this weekend or next week. If we start seeing a change in momentum, I'm going to be looking for a change in momentum, a change in direction here. I'm going to take a position, and then I'll be looking for a break of the upper resistance at about 42, 41, 43, something like that. So there you go, friends. Just be patient. Take a deep breath. Go outside, get some fresh air. Go to the park. Do something you enjoy. Go to the beach. Take a walk. Walk the dog. Eat pizza. Eat ice cream. Do whatever you need to do. But try to stay objective. Try not to let your emotions get the best of you. These are very emotional times. These zones, these Wyckoff accumulation zone, these severe sell downs, they are designed to create emotional stress in retail. All right, these big dips, the whales and the institutions, these hard sell downs, these severe fatal tests and supply tests. The reason for them is to create fear in the market and to shock the market and to create fear in retail buyers and holders, so they sell their Bitcoin, so they leave their positions, right? And then they provide liquidity for the larger players, the whales and the institutions, to enter their positions down here. Okay, so that's what I'm looking at right now. I'm looking for a resolution to the upside, even if it's in the short term. I'm looking for a bounce to the upside. I'm looking for a position when the momentum changes. I'll be taking a position buying, looking for a push up, and then if we see a failure here, I'll be exiting my position. If we don't see a failure, I'll be adding to my position on the break, going higher. Thank you for watching, friends. Sorry it's so long. Just wanted to put that out there, and we will see you in the next video. Take care.